What's up, folks? Anthony here, Special Analysis. Welcome to the video. I want to talk about how we identified crude oil this morning. So I'm going to actually clear the indicators for a minute. Just look at the bare price action, okay? We were looking for crude to put a low in and potentially reverse. And that was really identified. I can, right here. I told my traders, I said, listen, this is live, real time, guys, right? This is in the live trade room. This is analyzing NASDAQ, S&P, gold, and crude oil every morning from 8 to 11, leaving you all my analysis for the entire session. Today we got CPI report at 8:30. Really rattled the market, okay? NASDAQ, S&P, and gold took this really vicious whipsaw. So when we get big economic news that's not necessarily relevant to crude, I lean into crude because crude's not going to have probably as messed up of a day. Now, tomorrow we're expecting inventory report. So I know if I don't get a trade early in the morning on crude, I'm going to have to wait until later in the afternoon, right? So as news affects the way we trade, we have to go to the market that's probably less affected by the economic data. And crude was the market today. Yes, we sold off from 8:30. We took a little dip here, but we placed a low. And in this low, I was able to identify exhaustion from the sellers, perhaps even some absorption because the buyers stepped in here and would not let them go any lower. So I was watching this level right here, okay? And realizing that, hey, if we can hold this, we probably look pretty good. Now, as you could guess, right below these wicks sat a little bit of liquidity, okay? So the market naturally gravitated with this tiny little bar into the liquidity, and then the buyers exploded out. That, to me, when I saw this, told me that the buyers were very aggressive. So what was I naturally looking for? I was naturally looking for the opportunity to try to buy crude on a pullback. And that was achieved right here. Okay. So this is my bottom. And I identified this in real time. I said, guys, this looks like a bottom maybe. And no, it's not the picture perfect bottoming pattern. But I did like the fact that the buyers tried. The sellers made one more attempt, pushed below these wicks, and then the buyers absolutely took over. So I said to them, I'm like, very specifically, if this area here holds, we go higher. Okay? And higher to where? Well, my first objective was 78.15, right there. Okay? And you can see when we got to 78.15, we started having a little bit of trouble. So if you're comfortable buying the pullback, okay, this looked really good. If you're willing to buy the pullback, and this means you have to hit the buy button as the market is exhibiting great weakness at what you believe is support. Okay, and a lot of traders have a hard time doing this because psychologically you're buying as the market's falling. Okay, and it's not always the easiest concept for most folks to grasp. It's something it took me a long time to be able to feel comfortable buying into weakness, or selling into strength. And we'll talk about that in a minute when we get over here. But inevitably, that's what this was. And setting a lower high, and more importantly, a higher high from here to here, said that this confirmed that the bottom was in. Now, the lowest risk place is right here, okay? Yes, this could have dipped. It could have failed. That's the risk you always take when you're trading, guys, right? If you haven't realized that there is a great deal of risk in trading yet, then this is definitely not for you. But if you're a pullback trader, right, if you're a trader looking to buy at support, we identified a reasonable area that could be a bottom. We talked about how this candle pushed through these wicks ever so slightly where the buyers aggressively stepped in, right? So this is clear aggression from the buyers. The sellers pull back, place a higher low at support, And then we ultimately move on to 78.15, which was my first target, at a higher high. What do we do at 78.15? Well, we do two things. We pay ourselves, meaning we liquidate part of our position, right? We sell some of our position, and we take our stop and move it to our entry, wherever that may be. So from this point forward, we're not risking any more money, right? We pay ourselves, we protect ourselves. What happens next? Well, we kept looking a little bit higher here. I was really focused in on 78.60. Okay, that was really the number I was looking for. I expressed that vocally. I said, guys, I really believe that 78.60 is the number, but there is liquidity that needs to be consumed between 78.15 and 78.60. And it was fairly heavy at 78.45 and 78.50. All right, so it was staggered in this area. And you can see as we kind of pulled into 78.50, what happened? Boom, we got this pushback really aggressively. You know, we stumbled to get to 40, we pushed through 40, get to 50, eke through it, and then boom, right? We get this little pullback. Now, it's no big deal because we're still placing sequentially higher lows and sequentially higher highs. So the trend has not broken yet. All right, so there's no reason to pull the trigger here and say, okay, 78.60 was the ultimate objective, right? There's no reason you can't pay yourself more at 78.45, 78.40, 78.50. That's all fine and well. But the big picture objective here was 78.60. And if you want to just scroll back, 78.71, I believe, is the overnight high. 78.70, I'm sorry. And you could see we just wicked through it. And then what happened? Market sold off. To where? Well, guess what? We set a lower high. Okay? This was our support line on the way up. You can see we respected it, respected it, respected it. We broke below it, came back above it, ultimately to find resistance, right? Where is our resistance? Well, we were talking about 60, right? I don't know why this is doing that. That's not what I wanted. So either way, I'll just do it with this so I don't make a mess here. But where were we talking? We were talking about 60 being an area of pretty firm resistance. So if we were not able to get back above 60 and this support line that was in place now became resistance, where would you want to consider trying to sell it, right? So it's support here, it's broken, it's retested, it fails. So where am I looking to try to get short? Right there. Right? This is where we broke, retested this trend line, fell back down, came back up, basically right to the same level, wicked through it ever so slightly, and guess what? The market sold off. Well, where do you think we were looking for our first target? Well, 78.15. Going to use the same numbers as before. You can see we had a little bit of support here. Here's where the sellers got exhausted. Price falls back down to 78.15. You can see we even got a little bit of a pushback reaction. And then where were we off to? Well, we were looking to eventually come back down to where we started. And that's ultimately what we did. So crude really afforded this unique opportunity to play it both ways today, from this level towards 60, what we were looking for, 93 ticks at the overnight high, just over 100. And then guess what? We basically, from this level here where we created this perfect line of resistance, we fell basically right back down to where we started for another 88 ticks. And we fell a little short of testing the prior low, but notice where the buyers uniquely stepped in previously to take this aggressive drive higher is right in the same area where we found another 87 ticks to the downside. So guys, this is just raw, basic price action, okay? So if you have a bunch of indicators on your screen and they're confusing the heck out of you, just turn them off, okay? Just turn them off. I always tell people you should be trading on a naked chart, a chart that just has candlesticks and volume, okay? You should have another chart that gives you pivots and levels and analysis and all those other things. I mean, I didn't pull these numbers out of my, out of my behind. It was calculated analysis telling me where price was likely to run out of steam, where I should take profit first, where I could potentially be setting a higher low. Like, this wasn't all guesswork, guys. This goes into higher time frame analysis, looking at meaningful pivots that have had reaction to before, looking at liquidity, looking at order flow. Like, it's not guesswork. But if you're willing to put in the work, and you can run all your other indicators on another screen, right? Like, you could run your MACD and your VWAPs and everything. The chart I trade on has just VWAPs, just my VWAPs. That's it, right? Everything else is on a reference screen, meaning a screen that I reference, right? So this is what our reference screen looks like in the live trade room. And then I'm discussing what the price action's doing. Now, if the market's trending beautifully, if we have a higher time frame trend and a current time frame trend, then yeah, we're looking to just buy and stay with the moving averages. But if the market's not giving us that, and we're getting this back and forth notion, you have to look at the price action. You have to dive deeper into the price action. You have to look at your analysis. You got to break down the order flow. You got to look at the liquidity. There's a lot of pieces that go into me telling my traders live this morning, right here around 9:45, that this higher low looks like it's been put in. And if we achieve a higher high, it would confirm that we're in a reversal, right? That's not guesswork. That's looking at multiple time frames. That's looking at liquidity. It's looking at order flow. It's looking at a whole bunch of stuff, okay? Price action, volume, in order to make that statement. And I told them, if we don't hold this level and we fall lower, we could double bottom or continue lower towards 77.20, which was my original expectation before this price action occurred, right? There's always two sides to the story. If it's going to work, X, Y, and Z should happen. If it's going to fail, then A, B, C is likely to happen, right? If you're learning from somebody, if you're following a Discord or whatever it is that you're doing, and I don't care, like, that's fine, wherever you're getting your benefit from of learning experience, including, most importantly, screen time, there always needs to be, well, if this happens, then that's likely to happen. If that doesn't happen, then this is likely to happen. There's always got to be both sides to the story, because the market is a two-way street. It's not always going to do what you want it to do. Yes, it did cooperate with what I expected it to do based on higher time frame analysis, price action, volume, liquidity, and order flow. All those things led me to believe that a higher low was placed. And that if we placed a higher high, that a genuine reversal here has changed, that we've changed direction, and that 78.60 is probably the end result, with liquidity at 45 and 50 to be concerned about. Right? But all that doesn't just come from this. It comes from all those components I just talked about. So while all of this is great, the opening range, the pivots, the highs, the lows, all that stuff, the moving averages, it's all wonderful, okay? But there are certain market conditions, especially when a reversal is occurring on a higher time frame, that a lot of this, I hate to say, is irrelevant. Not irrelevant to ignore it, but irrelevant to the bigger picture. And in understanding that, you have to say, all right, is one of my strategies to take reversal trades? And if it is, am I getting good information from somebody? I don't know the answer to that question. Right? That's a question you have to ask yourself. But as I stated earlier, opening bell comes, crude market opens at 9 a.m., opening bell at 9:30, 9:45. We concluded the opening range. And I said, I believe that a higher low has been placed, and it will be confirmed by a higher high. That's when I talked about 78.15. From there, 78.60 is my biggest concern as far as higher time frame resistance goes. So my clients knew right here that at the conclusion of this very specific candle, the 942 candle, that my belief was based on price action, volume, liquidity, and order flow, that a higher low has been placed. 78.15 would confirm a higher high and a break of this prior consolidation period and this prior high here, onward to 78.45.50 where there was quite a bit of liquidity, and then technically 78.60 followed by the overnight high at 78.70. I wasn't so worried about the overnight high. I was more worried about the higher time frame analysis. Guys, if having somebody interpret this information for you is valuable to you and you'd like to trade with me, you're welcome to. Okay? If you don't find any of this valuable to you, or you're looking for entertainment instead of analysis, then I'm definitely not your guy. Okay? I'm not an entertainment guy. Right? When it comes down to focusing on the actual analysis that goes into taking consistent, profitable trades, high probability, lower risk, because every trade has risk and every trade can go wrong. Just like I told them, if we fall through this level here, we fall through this low, we could double bottom or break down to 77.20. So that was the downside play. But the upside analysis is what I've described. So if you're interested in joining me live, you're welcome to, right? I don't sit here and tell you how to trade your money. That's not my job. Okay? My job is I'm a market analyst. I analyze the market and I give you my interpretation. What you do with that interpretation is up to you. I don't say buy here, put a stop there, and take profit there. I tell you what I believe is happening, and I tell you what I believe could happen next. You as the trader have to do your job by deciding if that is a trade for you or not, by deciding if you're prepared to take a risk or not, by deciding if it meets your trade plan or not. Okay? I'm not here to do that for you. Right? I'm not this guru that tells you to buy or sell. I am a market analyst. My job is to analyze the market, interpret it, and tell you what I believe is happening and what I believe is going to happen potentially next. And if I'm wrong, what is the other side of that look like? Okay, that's what I do. No entertainment, no buy or sell, none of that stuff. Okay, this is purely analysis. Right? This is not for everybody. Most people are not going to be patient enough to wait for the trade because they see the market move and they feel like they have FOMO and they're missing out and all this other crap. But if you are a disciplined trader that knows how to place and manage trades via your own trade plan, and you would like somebody to analyze the futures market for you, NASDAQ, S&P, crude oil, and gold, Monday through Friday, 8 a.m. to 11 a.m. through the most volatile time of the day, that's the service I offer. In addition to that, I leave my trade rooms open through the closing bell, so you have the use of all my analysis if you decide to trade through the balance of the day. All right. If you have questions, feel free to email me. My email and contact information and website's all below the video. Again, this is not entertainment. This is professional grade analysis. I will interpret what I believe could happen and what could go wrong. And then you as the trader have to decide what's good for you. I appreciate you guys. God bless. I'll see you in the next video.